Hello everybody, this is Lara with your end of the week analysis for US oil for the trading week ending 29th of May 2020. Elliott Wave analysis first, classic analysis last. It looks like oil has found a sustainable low and I'm expecting price to continue higher, but not for too much longer though. Look out, there should be the first of a series of deep multi-week pullbacks coming up. Not quite yet, but it could be coming up sooner rather than later. The risk of that happening soon is very high at this stage. This is a corrective structure, a counter-trend movement. In Elliott Wave terms, this is a double zigzag. The simplest Elliott Wave pattern is a 5-step forward pattern, labelled 1, 2, 3, 4, 5. This is the end of one up here. This is labelled a second wave correction and the start of a third wave. A third wave needs to move beyond the end of the first wave, and it needs to move far enough above the end of the first wave to allow room for a subsequent fourth wave correction to unfold and remain above first wave price territory. Those are the basic rules of that simplest Elliott Wave pattern. The third wave may only subdivide as a simple impulse, and so Elliott Wave is fractal. We'll label the third wave 1, 2, 3, 4, 5, a 5-wave impulse. And within it, the second wave can't move beyond the start of its first wave below the invalidation point. Let's take a look now at the daily chart. Weekly chart. We're going to start from this high here, labelled cycle wave X, which is this point up here. Here's the end of that big Elliott Wave corrective structure, the double zigzag, and the start of this possible third wave. We're looking soon for the end of a first wave. When it's done, I'll be expecting a deep multi-week correction for a second wave, and when that's done, a third wave within a third wave. That's the strongest portion usually, and for a commodity it's usually the end of it that's the absolute strongest. Cycle wave 2, when it arrives, may not move beyond the start of cycle wave 1. This is a straight line. This arrow is intended to give a general idea of the direction for price, whether it be up, down or sideways. But price will not move in a straight line. That's not how markets behave. There will be corrections along the way. So although this is a straight line, don't expect price to move in a straight line. And we'll look at more detail as we get to lower time frames. Let's do that now for the daily chart, the end of supercycle 2 here. There's this point here. I'm looking now for the end of intermediate wave 1, within primary 1, within cycle wave 1. Within cycle wave 1 itself, the corrections for intermediate 2 and to come further in the future, primary 2, these second wave corrections could be very deep and very time consuming. For this particular market, and often for many commodities, for this particular market, the first big second waves within a new trend do tend to be very deep and very time consuming. And so when intermediate 1 is over, I'll expect a correction for at least 2, 3, 4, 5 weeks to unfold for intermediate wave 2, probably about 5 weeks and probably a bit longer. Corrective movements for this market can tend to take longer than the movements that they correct. This is the simplest Elliott Wave structure, a 5-wave impulse, 1, 2, 3, 4, 5, and it meets all Elliott Wave rules. 3 has moved beyond the end of 1, 4 has not moved back into 1 price territory, and 5, now beginning, has moved beyond the end of 3, avoiding a truncation. 3, for this example, is a little bit shorter than 1, and so for this to meet all Elliott Wave rules, 5 may not be longer than equality in length with 3 at the limit, 41.56, because 3 may not be the shortest out of 1, 3 and 5. That's another core Elliott Wave rule. And so if price keeps going and reaches above the limit I've calculated here, then my labelling of this is wrong and it would need to be fixed. For now, I'm going to leave it as 1, 2, 3, 4, 5 because it has such a good fit. 3 subdivides as an impulse, which it must, and this has a really good look. When I draw an Elliott Wave channel from 1 to 3 with a copy on 2, it's mostly contained within this channel. I'm going to use this channel quite strongly next week. While price remains above the lower edge, I will expect upward movement to continue to end at or before the limit. If price breaks below the lower edge of this channel with a full daily candlestick below and not touching this trend line, if that happens, then I'll label intermediate 1 over and intermediate 2 just beginning, and then I'll expect a multi-week deep pullback for intermediate wave 2. At the weekly chart level, these last 3 or 4 candlesticks now complete an advanced block pattern. Price is moving higher, but it's doing so with smaller range, and this week as well, weaker volume. There is weakness in upward movement. The risk here of a pullback within this upward movement developing is even higher than last week. If it keeps going up, next strong resistance above is at 42. ADX reached extreme for the previous downward trend at the weekly chart level. It's now declining, telling us that at this time frame there is no clear trend. It is a lagging indicator. Here it's based on a 14-week average, and we've only had 5 weeks of upward movement. ATR starting to decline as price is rising, indicating a bit of weakness in upward movement. On balance volume has no new consolidation or no new trend lines. RSI is in neutral territory. There's room for price to continue higher before this situation reaches overbought, and stochastics also in neutral territory. At the daily chart level, there's fairly strong resistance above, identified here at 36.05 to 41.05. This may assist to halt a rise in price. On balance volume is bullish. It doesn't have a new range though to break out from. The last signals from on balance volume were bullish with a break above resistance and then 2 tests of support which were prior resistance. RSI is still in neutral territory. There is room for price to continue higher before RSI reaches extreme. Stochastics is overbought, but when this market trends, it can remain extreme for a long period of time. ADX indicates an upward trend. And so there is an upward trend. It's developing a little bit of weakness, and so it is at risk here of a deeper, more time-consuming pullback or consolidation developing. And for this market, early on in a new trend, it's usually a really deep, time-consuming pullback that may develop. That's all for me this week with your oil analysis. I hope all our members are having an awesome weekend.